Hi, this is Acme with the Bulletin Board Heroes on Tuesday, July the 9th. Starting off with a former favourite, Emerson, where it looks as though shares are just starting to break out of this falling wedge formation from the end of April. The good news is the rebound above the 200-day moving average, which is a bullish sign, as well as obviously the falling wedge there. The idea here is that while we're above 3.8 pence area, or perhaps it's 3.7 down to the 200-day moving average, the initial target here up to 4.6 pence. Obviously, we've got the 6 pence peak of the year in focus after that. Moving along to another interesting situation, E-Therapeutics. Nice turnaround here and consolidation above the 50-day moving average at 2.18 pence. While we're above that, stock could head back towards the 5 pence zone, which is March resistance, and the 200-day moving average at 4.84 pence. Next up, a stock which missed out on before, but Emotion now currently looks as though it's ready for a new leg to the upside. We have the bounce off the falling 200-day moving average at 8.11 pence. Gap higher today, which is normally a decent signal in these situations, and target here as high as 13 pence at the top of a rising trend channel from February. Obviously back below the 200-day line would rather cool off the enthusiasm, but as the gap higher today shows, this looks as though it's having another go on the upside. Next up, a stock which was shouldn't strictly be here, but it's done so well recently against a falling market, Loan Bonner. There was an extended base building process at 5 to 6p or 5.5p to 6p, flushing out the last of the bulls there after the gap down in May. We're just breaking the 50-day moving average at 10.3 pence. End of day close above that today should take us up to fill the gap towards 15 pence over the next few days. Best case scenario target here as high as 20 pence over the next month, which is the top of a rising April trend channel. Petromatad is next, and here we've got what looks like a beautiful chart, actually. Wonderful formation there with the break through the 50-day and 200-day moving averages there, a sort of V-shaped bull flag, which is one of the more positive formations that you can get. And basically, the view is that the stock could head as high as top of a rising trend channel from December, currently heading up to, let's say, 12 to 13 pence. But it is the formation here which is really very encouraging indeed. Going on to another favorite of the moment, lots of retail investors excited about SafeStay. And at the moment, quite rightly so, the bear trap rebound from below the 200-day moving average at 36 pence. Above that, we could hit the top of a wide rising trend channel at 50 pence over the next month or so. Finishing off with Way Education. Here we've got a situation where the stock has gapped through the 200-day moving average at 9.16. Gaps through moving averages tend to be very helpful indeed to the bull cause of the gaps to the upside, obviously. And rising trend channel here with the March resistance line projection there heading for 16 pence. Stop loss on the buy argument back below, let's say 8.5, but ideally we don't even go back below the 50-day moving average at 8.87. That's it from me today. More Bulletin Board Heroes tomorrow.